How do interest rates affect my mortgage payment?
I mean, interest rates have a big play in it because that's how we determine your monthly payment, obviously. It's hard to give you a indicator on how much like an eighth of a percent of rate is going to change your payment by this amount because it's definitely impacted by the loan amount on top of it. A higher loan amount is going to have a bigger change in payment versus a lower loan amount with the same rate changes. So it's hard to give you a factor, but one key part of the interest rate question is the interest rate is the most effective way to get a lower payment. So a lot of people are like, oh my God, my payment's too high. How much do I need to put down on my down payment to get a lower payment? And I'm like, well, let's not talk about that. It'll cost you. So say $50,000 down, you might save $300 to $350 a month. Whereas you could take maybe 10 or $15,000 and buy the rate down and get the same result. I mean, yes, you're going to have more equity the other way, but dude, coming up with 50 or $60,000 out of pocket versus 10 or 15 is again, if you're really nervous about the payment, I would say keep as much money as a bank and supplement every month. That's by far the smartest move. Because again, most of my clients that did stuff like that ended up not needing to supplement. They just kind of built that payment into the budget, not needing that money, but yet it's there. So they win in two ways. They get a bunch of equity over here and they still have a bunch of cash in the bank over here. Now, the clients that did use the money to supplement, eventually rates will come down. At least most people are predicting rates lower over the next year. You're going to have an opportunity to refinance and get closer and closer to that payment that you want to be at. Now, if today's rate and payment is not where you want it and you want a lower rate, and a lot of my clients do, they're like, I don't want this payment, period. I understand the whole having money in the bank thing. I just want a lower payment. Again, let's strategize about buying the rate down lower. I'd rather buy the rate down than have you come up with tens, if not hundreds of thousands of dollars out of pocket to get a payment where you could get it with only tens of thousands or less from that standpoint. So the interest rate does have a great impact on your monthly payment, and there's a lot of strategies around what we can do there. Another option that we haven't seen as much anymore is the 2-1 buy down. That's another option that we can play with the interest rates where we do need some help from the seller, which again, this market allows it. But the 2-1 buy down allows you to buy the rate down by 2% the first year, 1% the second year, and then it goes up to the regular rate for the third year and the rest of the term of the mortgage. It's not an adjustable rate mortgage. It's a 30-year fixed mortgage at the higher rate, but the seller pays a buy down for 2 years. The first year is 2% lower. The second year, your payments, based on a 1% lower rate. And then the last year, it goes to the fully indexed rate. The idea behind that program is wait for rates to come down. Eventually, when they do come down, you refinance and lock in at one of the lower payments down the road. Have you brought those up a couple of times in the past? Is that kind of a strategy that you like to use too to help people feel more better about the payments they're getting into?
I mean, I usually refer them to you when it comes to buying down interest rates because a lot of people are stuck on, having a lower interest rate for the life of the loan or having a temporary. But I just like to give them other options because I know when interest rates were super high, that
Yeah.
was one that was kind of suggested quite a bit, the 2-1 buy down, or I've even heard of a 3-2-1 buy down.
Yeah.
But I think only a seller can contribute to a 2-1 buy down, correct? The buyer cannot contribute to it with extra cash that he or she has. Is that right?
That is correct. There are some workarounds on that I
Yeah.
found. They're not as pretty though at the end of the day.
Yeah.
Like want to get the seller to cover those
Yeah.
is the best part. I mean, they are expensive buy downs. The 2-1 buy down on a $500,000 loan might be, 11 or $12,000 we need from the seller just to cover the buy down on the rate for those 2 years.
Yeah.
Um, you
It
know,
just doesn't
so
seem worth it.
yeah, so it just depends on what the situation looks like. I've done a
Yeah.
few of those and, the clients were happy with them, but, they're starting to adjust now and it's been a year, now they're going to their second adjustment. They're still at a better rate than they could have got today, but now they're getting ready to, hey, we're ready to refinance here. The good news is they got 2% lower for the first year at like a 5% rate. Now they're at 6 point something right now, and they're going to go to 7 in about another year. But, right now rates are already moving in the right direction. We could easily refinance today and get them the same rate they have and it wouldn't go up again. So that's good news. What we're trying to do is strategize on waiting it out for, lower rates so that we can get an even lower payment overall, maybe closer to that initial start rate that they got on the 2-1 buy down or whatever.
Yeah, it's a great point. At what point can I refinance?
Make 6 monthly payments on the house is kind of the rule of thumb.
Okay, so if all of a sudden in 6 months all of the interest rates drop to 2.5%, I can refinance.
Let it rain. Let it rain.
I know that won't happen, but like if something crazy happened and all of a sudden interest rates just dropped dramatically compared to what I'm already in, I can just call and refinance.
Yeah, yeah. I mean, it's 6 months typically is the waiting period. Like FHA and VA require you to wait 6 monthly payments and 210 days from the time of the first payment due date of the original loan. So they have some more stringent requirements. Conventional is 6 months to use the new appraised value. You can potentially refinance before 6 months is up, but there's some other things you have to be worried about, but you also are stuck using the purchase price to refinance. And most people that are buying, want to have a little more equity built up, and more equity means potentially lower mortgage insurance or removing mortgage insurance. And so there's a lot of benefits to waiting for the seasoning part of it to try and utilize a better value potentially.
When do you think that seasoning period is? Like 2 years?
No, the seasoning period on conventional is 6 months.
Oh, just 6 months.
Yeah, just six
Okay.
months. And same with FHA and VA. It's six monthly payments plus 210 days, whatever
Okay.
is longer.
But if the interest rates were not good, you probably wouldn't want to refinance,
No,
right?
no, then we would look at it. I mean, I check in with them, all my clients about 6 months after closing just to say, here's where the market is. Doesn't look like you have any opportunity to refinance, but we'll continue to keep an eye on it. So we're always checking in to, make sure they're aware of what the rates are. I mean, people are getting inundated, right after closing with a ton of advertisements and stuff as well. So they're kind of seeing what's out there. But here's the thing is, interest rates that are advertised out there, a lot of times they have these smoking low rate to get your interest, but then
Oh
it's
yeah.
a boatload of money built into it in points and buying the rate down. And I've had too many clients, in my opinion, they got hoodwinked on the
Oh
deal,
yeah.
got scammed into a loan that they thought was no points and no money out of pocket, but in reality, it was rolled into the loan, and they ended up paying a dear amount for it, which I'm sure they got all the right disclosures. It just was the way they heard it was different than what they actually got, unfortunately. So you just got to
Yeah.
make sure you're reading the fine print and you're working with a lender you trust to make sure that you know exactly what you're getting into so that you get a great deal and a great savings without paying dearly for it up front.
Oh, absolutely. And that's what I appreciate about you is whenever my clients or our clients are kind of shopping around, right? Because they all like to shop around because they see that lower interest rate.
Yes.
You can walk them through and show apples to apples. And you even told me, we've even had a mutual client where you're like, I can't compete with that. Like that's a smoking deal. Go ahead and take it because I think it was in new construction. And
Yeah.
so, you didn't get them at that time, but I guarantee that once they're ready to refinance, they're going to come to you
Yeah, absolutely.
because of your honesty and because you were educating them throughout the process. So, well, that was huge. I mean, interest rates are a big deal. I mean, that's why people were buying homes as much as they were back in 2020, 2021 because interest rates were so low and everything was a lot more affordable. So now interest rates are in sixes and sevens, increases the mortgage payment, things are a little bit more expensive, and home ownership is not as attainable as it used to be. But it still is. It still is. So the best way to know if you can afford a home is to talk to Jeff, talk to a lender, look through your numbers, get pre-approved. Let's chat.